Now, loss-making companies have been afforded a sigh of relief after the High Court in Machakos declared the minimum tax unconstitutional and the minimum tax guidelines null and void. Now, this throws out the tax at 1% of an entity's sales, which took effect at the start of 2021. However, the ruling issued by Justice Odunga goes ahead to provide for an order restraining the Kenya Revenue Authority from implementing or enforcing the provisions of Section 12D of the Income Tax Act.
5 months after the High Court issued stay orders on the implementation of minimum tax, the tax which took effect on January 1, 2021 has been deemed unconstitutional, null and void. In his ruling, Justice George Odunga stated that the tax, and I quote, would result in diminishing capital for those making losses, while for those making profits, the capital base would be unaffected. End of quote.
The minimum tax has the potential of not only subjecting the people to double taxation, but also unfairly targeting people whose businesses, for whatever reason, are in loss-making positions to pay taxes from their capital rather than from their profits. Section 12D of the Income Tax, as introduced by the Finance Act 2020 and amended by the Tax Laws Amendment Act 2020, violates Article 201B1 of the Constitution and is null and void.
The ruling deals a blow to the Kenya Revenue Authority, which was banking on the minimum tax as one of the measures to help ramp up tax revenue amid a subdued business environment. The taxman was hoping to mobilize 10 billion shillings through the new tax in a full financial year. The Kenya Revenue Authority says it disagrees with the ruling of the High Court and will take the matter to the Court of Appeal. KRA has in the past defended minimum tax, saying it is a tool to widen the tax net to include those in perpetual loss territory.
From a fairness perspective and looking at the tenets, basic tenets of tax, fairness, equity, then you ask yourself, you've been in business for 5-10 years. You're consistently reporting losses. Are we missing something? Should that be the case? Shouldn't you have changed your business model? Should you have changed, maybe ventured into other products? So even for us as care, and the government generally would be left asking the same way. You'd be saying, why am I paying taxes when my bottom line is in negative? And we'd ask ourselves, why are you in business consistently 10 years when you're making losses?
In his ruling, Justice Odunga challenged the executive to develop a system which enables it to weed out companies which feign losses to evade taxes, as opposed to using a single tax which then nets even those who are tax compliant.
The solution was not to cast the net wide in order to catch the culprits as well as non-culprits, as was done, but to develop a system which was tailored to target only the culprits.
It is a tax that has been there in other jurisdictions for quite some time now. And Kenya, as it is a late entrant into the field.
In the first review of Kenya's $2.34 billion program with the International Monetary Fund, the government asked the fund to modify the target set for revenue collection. With minimum tax now thrown out, the government will be even pressed harder if it is to meet the revenue targets agreed upon with the IMF. Julian's Amboko, NTV.